Hello and welcome to the Mutual Fund Show. My name is Neeraj Shah and this is the viewer special, really. We try and get in as many queries as we can to our experts. Not exactly rapid fire, but try and do something like that. Answer questions from our viewers. We've decided to now do this once a month, every month, so that while people watch shows and get educated about funds, they might have short-term queries which we may not be able to answer almost every single time. And therefore, over a 25-30 minute show, we can take in more of such queries. To give response to our viewers on this, two very special guests. I love talking to them almost every single time they are here. Tarun Birani and Gajendra Kothari of Thinking Man and Etika Wealth Management. Thank you so much, both of you, for joining me today.
Our pleasure.
Tarun, birthday greetings.
Thank you so much. Thank you so much, Neeraj.
Okay, before we start the show though, the big question for the day, for this week rather, and something that we do again on every show, irrespective of the theme of the show, we try and talk about the one most important talking point in the mutual fund industry. And the question to both of you, the big question is, because of the recent bout of underperformance that we've seen in small caps and thereby the relative underperformance of the small cap funds, is this therefore a good time to start investing or even do lump sum investments into small cap funds?
Yeah.
Okay, let's start with you.
No, not really. I wouldn't suggest that because small cap funds, though relatively might look that they have performed badly in 2018, but still when we talk to fund managers, the view we get is still not all small cap stocks are attractive. It's very selective. So when you buy a small cap fund, you come to stock specific things, and that is why they're not also very sure right now, or they're not very, it's not in a very comfort zone right now, the fund managers, that it's a time to go all out and buy in lump sum. I would still recommend a staggered approach over a 6 to 12 month strategy.
But a good time to do a SIP staggered approach into small cap funds.
For SIPs, I think any of such funds is always a good time, because you.
No, but relative basis, is this a better time than maybe a large cap fund to do an SIP in a small cap fund?
Yes, to that extent, I would say yes, because large cap funds comparatively have not fallen much. As we see, index is almost at all-time high. So small caps, to that extent, can prove to be productive. In 2 to 3 years' time, you can get a good alpha over large cap funds.
Yeah, that was the reason why we thought of this also, was because there has to be a reason why a bunch of houses over the last 6 to 9 months have reopened or started fresh small cap schemes as well. Tarun, what would your advice to clients be? So,
Neeraj, I always say in my opinion, it should be more of a suitability driven exercise where if an investor is able to take that kind of risk, we need to look at that suitability angle, risk tolerance level, and based on that, we need to see whether a small cap can be advised. As told by Gajendra, I also concur that I think we are not behind the pain. There is more pain will be there in small cap. That's what my sense is also there. So I feel a staggered approach in small cap should be looked at, but yes, definitely this asset class looks much more attractive compared to a year before, 6 months before. So I think investor with say 7 to 10 year horizon could start looking at it more seriously in a staggered way now.
And just to confirm, I have my own money invested in a mid-cap fund, not even small cap, and last 3 years returns, SIP returns are still negative, Neeraj. So you can imagine the kind of patience required.
Yes.
At least you should have 7 to 10 years. And most retail investors who are watching the show, tend to get nervous after 18, 24 months, and they throw in their towel,
Well, I think people have gotten nervous after 12 months.
Yeah, exactly.
For 12 months. So I think that's a very valid point made by Gajendra as well. Keep along.
In fact, this is a good time to accumulate, rather. I would say you're getting a good prices over the
So on this, Neeraj, this point, most of the investors are investing looking at last 1 year performance, 2 year performance. All these online trends and everything in investing, what we have seen, because there is so much euphoria created by media, so people started investing and now they're seeing negative returns. So
I don't think, frankly, media has had to create this, right? Paytm, for example, in its own sweet way, has got so much reach that they are able to do this on their own.
Yes.
You don't really need any kind of euphoria coming in. But okay. No, please make your point and then we'll get on to a bunch of queries.
I know. Quickly, what happens normally on these direct platforms, people just go and check 1 year and 3 year returns. And if in last 3 years Midcaps has given good returns, they think it will be repeated in the future. And that's the worst mistake people make, because these tend to be cyclical. A theme which has performed might not perform for the next 3 years.
So keep that at the back of your mind. Click for a recent outperformance may not necessarily work. Okay, let's start with the queries. That's the crux of the show today, isn't it? The first query comes in. Okay, let's start with Brijesh, who writes to us on Twitter. He wants to know whether Sensex or Nifty ETFs versus large cap mutual funds versus index funds, are large cap mutual funds still worth the expense ratio cost? Tarun, if I can start off with you.
Yeah. So ETF as a concept is gradually taking off in India, and I see a lot of value in looking at ETF now. At least in the large cap space, definitely but there are themes like junior Bs, which we have looked at from a 10-year perspective. It has given more than 20% return. I see why any serious investor should not look at a theme like a junior Bs. So I strongly feel that on the large cap space, one can start looking at ETFs much more seriously compared to where we were 2 or 3 years before. Yeah, that space need a lot of serious attention now.
Okay, you differ from this view?
Yes, a bit.
No, which is fine.
Yeah,
it's always good to have that.
Absolutely. No, I feel still it's too early days, to think that active funds, particularly in the large cap, can't beat index funds, because last 1 year was quite different because few selective stocks have gone up, and mutual fund as a house cannot buy all the stocks in concentration. They have to have a diversified portfolio, so that's why they tend to underperform. But I still believe India is, in the whole scheme of things, India is still a small cap market compared to the world market cap. And there is enough opportunity for Indian fund managers to generate alpha even in the large cap space. So, and with now TERs coming down post April 1, even large cap funds will be quite attractively priced. So, I think I still feel fund managers can beat index by 3.5% even the next 3 to 5 years. So, at best, what I can recommend is you can have a couple of large cap funds and an index fund just to compare how it performs. And 3 years, you'll have acid test, and then you can decide where to go from here.
Yeah. Okay. Brijesh also wants to know which is the best option in the mid-cap ETF, or which is the better option, I'm guessing, a mid-cap ETF or a mid-cap index fund. And my guess is maybe Brijesh wants some names as well. Brijesh, I guess we'll get to names and the recommendations in a bit later on in the show. But if I understand this question correctly, mid-cap ETF or mid-cap index fund, is there a valid?
No, it's a similar
thing, right?
Yeah, there's no difference as far as the underlying is concerned.
Okay. Varsha Kapasi has written to us. She's new to mutual funds and she's a full-time trader in equities. She has funds of about 15 lakh rupees and wants to invest for long-term 20 years. She's asking whether mutual funds or direct equity investment, which is better. Now, Varsha, maybe if I can take that question as well. Frankly, if you are a full-time trader in equities, you know the subject very well. Maybe you stick to your level of expertise, because at least even if you don't get returns, you have yourself to blame. If you move to mutual funds, which is not you investing while you are full-time into trading equities, and then if you don't get returns, there'll be a double grouse. So just keep that at the back of your mind. However, maybe diversification could help as well. Part money into mutual funds, part money into direct equities.
But at times I feel it's difficult to manage mentally.
Right.
If you're a full-time trader, your mental model is different versus a mutual fund mental model is completely different. There it's a buy and hold. So if you can manage that beautifully, you can go ahead. The other thing I always suggest is that check your performance. If she's a full-time trader, she can check her performance over the last 5 years. If her portfolio has beaten mutual funds and Sensex, then I think I agree with you. She should continue. But if not, then I think she should have a relook seriously and start contemplating.
Valid advice too. Yeah, Tarun.
One point on this, trading and investing is a very different thing. So trading is something to generate a regular income on a basis, which I feel is extremely difficult for anyone. Maybe 1 year, 2 years they may do, but over a long period of time to generate consistent returns, I feel it's a very difficult task. Investing is a different science completely, and I have a recent case study to talk about wherein investor was in a dilemma whether to invest in a direct equity versus mutual funds, equity mutual fund. But that is where the evolveness of investor needs to come in, how sophisticated they are in terms of tracking those companies. So let me take example of company like Maruti. Maruti was like last 3 years it was doing phenomenally well. Last 6 months we are seeing the economy is in a different shape. Automobile sales are going down, and Maruti from a 10,000 level is 6,500, 35% fall. Just imagine for somebody, a large cap stock like Maruti is 35% down in just 6 months. somebody to start getting into equity just based on hearsay is going to
but I
get
think
very
Varsha is
difficult.
new to mutual funds. She is a full-time trader in equities. So for her per se, she may not be new to equities per se. And maybe she is able to manage these risks better. Maybe she has stop losses in place.
Trader and investor, Neeraj, that's my problem. So a trader works in a very different side. I think maybe she must be doing futures and options and all those derivative strategy. But investing requires a very different temperament. It's a behavior science in itself. Right. So I think if she is looking at investing for her long-term goals and needs, I think she need to really look at what kind of time commitment she want to give it investing and all that.
Yeah, well, so Varsha, I think that point is also well taken. So if you're moving on to another asset class, which is in a sense, even if it's equities, it's investing, which is what you normally do, or mutual funds. If you can dedicate time to investing, if you know balance sheets, etc., it's great. Otherwise, maybe funds, it might be a better option as well. Just keep that at the back of your mind. Anyways, let's move on. Jaydeep Nehwal, and he's asking a question about whether infrastructure would be a good theme to bet on because of the fact that the government is likely, if it comes back into power, the focus is going to be on infrastructure. And if infrastructure is a good theme to bet on, what are the funds that you would recommend? If not, what are some of the other sectoral funds that you would recommend in order to get good returns? We're going to talk about funds at length, but since it's a thematic thing,
yes.
Either of you wants to weigh in?
I would take this. So Jaydeep, my honest recommendation to you is that stay away from sector funds. I'll give you my example. For last 8 years, I am an infrastructure fund holder, and my 8-year return is 6%. Okay, it's
cumulative.
Cumulative. Annualized 6%.
Annualized 6%.
6%. Right. And and when I invested 8 years ago, it was looking very attractive because it has fallen down after 2008 meltdown. So and never do investment decision based on what government announces, because government may change their policies, and you may get stuck. So for a retail investor, we really suggest you to stay away from thematic funds, because let the fund manager take the call. If you're in a diversified fund and the fund manager feels okay, he thinks there's a future in infrastructure stocks right now, he can take 20-25% exposure. But for a retail investor, you don't know when to get in and when to get out, because these all tend to be cyclical. So it's better to stay away from these kind of funds. So I would recommend you to stick to multi-cap funds. I think that's a great bet in the long term.
Neeraj, one point on this infrastructure fund. I also did some research around infrastructure. Last 10 years CAGR, average returns of all infrastructure fund is CAGR of 12% from last 10 years. Average large cap fund category has given 18%. A mid cap category has given 22%. So the risk which you take in getting into infrastructure is close to 20-25% standard deviation kind of risk you build in. Compared to that, mid caps also take a similar kind of risk. But look at the risk reward ratio. So and I think infrastructure as a theme is available in most of the large cap and mid cap funds.
Anyway.
So maybe
as such also.
Okay.
So I think it doesn't make any sense at this point, and they have not delivered. I think we don't have any history to talk about.
Okay. Now we'll ask a question to one of our experts and get the answers from them, because there are a bunch of queries and there are a bunch of live queries that have come in as well. So we'll need to address some of those. Since we are on the topic of thematic funds, I'll take Bharti Prasad's question first. I don't know, Bharti Prasad says that ICICI Prudential AMC has launched the Bharath consumption scheme. The scheme aims to benefit from the Indian consumption story. Is it advisable to invest in this fund? Either of you, who wants to take it?
Yeah, consumption, it's a very broad theme. It's more or less like a diversified fund, because it includes almost 15-20 sectors. So I think Bharti, you can go ahead with this one. There's not much risk into this.
Is there a better consumption theme available, or would you advise that ICICI Prudential AMC's Bharat consumption scheme is a good one?
No, I would suggest go with an existing fund. There are bunch of funds which are into consumption space, which has a track record. So rather than going for a new fund, I would suggest to stick to funds which have had 5-7 year track records.
Okay. Do you have any names off the cuff with you? I mean, it's okay if you don't. We can reply it on.
There is SBI Consumer Fund and Tata Consumer Fund, which has a track record. So you can choose any of them with 5-year track record plus. Don't go for the new fund offers generally.
Okay. There is a live query as well. So maybe we'll do a mix of live queries and the ones that have come in earlier. Don't worry, I'll try and take as many queries as I can. But Saurabh Jain has written to us on Facebook, and he wants to know about the fund of funds as an emerging category. Is it worth considering a fund of funds keeping in mind the taxation into some of the other categories as well. Tarun, you want to come in on this?
So I think fund of fund as a category a year before was not very attractive, but I think post the new budget, and I think where the clarification came wherein all these fund of funds will start attracting the asset class where they have majority, they will get the taxation benefit similar to that. I think this gives a very strong leeway to all these structures. And I feel a market situation like this where we are today, where there is no direction. I think direction is a problem, and this year looks like more of an asset allocation kind of year. I think a fund of fund have inbuilt strong ability to maneuver around a lot of asset classes. You can start getting into equity, debt. You can get into existing fund where you can get which have established performance. So I feel fund of fund as a theme will see a lot of development in coming months or years to come.
Only caveat is that you should invest in fund of fund which invest in other mutual fund schemes and not on its own. 80-90% of the Indian fund of funds invest in their own products.
Okay, sure. So every other product as well, not just the own house.
Not just the own house. Sure. It should go in other fund houses. Then it's a true diversification.
Okay, so keep that at the back of your mind. Sanjan, thanks for writing to us. Very quickly, there are a couple of queries on which I'll try and give an answer to myself, but Vishal Kapoor has written us a query on ETFs. Since we are talking about ETFs and Brijesh was giving that query, Vishal Kapoor asked that the CPSC ETF and Bharath 22 ETF, he wants the views on the above two ETFs because according to him, they don't seem to be generating any returns. Should one exit or hang on?
Yeah, I would recommend exit, because these are primarily government driven. Again, a lot of depends on their policies. Again, if the governments change, you don't know what new policies will come. So it's better to stay away from such things. Stick to, again, multi-cap funds where a fund manager can take the call whether public, private, and what mix.
Okay, Tarun, do you differ from this view or no?
So I completely agree with Gajendra that, yeah.
Okay, you agree. So, Vishal, the answer to your question from both our experts seems to be that you should try and exit these funds. Now, Parag Gandhi is a pensioner, 60-year-old pensioner, wants to invest in mutual funds. How can he invest them online? I think there are various things that you can do, but maybe going on to various websites would do that. But he's asking for the kind of schemes that he should invest in. Now, just wondering, quick 30-second each from both of you. Since he's a 60-year-old pensioner, what would you recommend? What kind of schemes?
Yeah, again, depends on suitability, but if he's a first-time investor, I would suggest go with a balanced fund. Okay, 65-35, 65 equity and 35 debt, and can start an SWP from that fund at a rate of 8% per annum. I think that would be an ideal choice, a thumb rule answer, I would say.
Okay, systematic withdrawal plan, Mr. Gandhi, keep that at the back of your mind. Okay, now before we move further and get some recommendations for various categories from our experts, let's get in my colleague Nikki Mirchandani. She joins in right now to talk about a list of funds that have performed well over the last 1 year, since this is the last mutual fund show of the current financial year. The year will end on 31st of March. What are the funds that have done well over the last 1 year, and maybe why have they done what they have done? Nikki.
Well, Neeraj, it's not been typically an exciting year, even for the equity large cap fund category, where of the top 5 that we've picked up, they've not even managed to, not all of them have managed to outperform the Nifty 50 index as a whole, which has managed to fetch a return of around 13-odd%. Let's look at the list that we have. Just as a basis of criteria, we've selected only those funds which have an AUM of more than 1,000 crore, and we filtered out close-ended funds, index funds, and the ETFs for the list that we've drawn out here. First on the list, we have HDFC Top 100, launched in 2013. All of these funds have been launched in 2013 with an expense ratio of around 1.41%, yielding a return of around 16.23 over the last 1 year. Next on the list, we have Axis Blue Chip Fund, where the expense ratio is the limited amount of 0.89%, and fund has actually performed well, 15% out there. Reliance UTI ICICI Prudential Blue Chip Fund, where you have the category of less than 10% coming in from these two players, which is lower than the return of benchmark Nifty 50 index as a whole. Just to understand how these funds have performed over the period of 3 to 5 years, or rather pick and choose the funds which have actually managed to perform well and making it to the list of at least top 5 in the list in the span of 3 to 5 years. We have 3 odd funds out there, where HDFC Top 100 has for the year fetched a return of 16% on 3-year basis. It's an 18% return on there, and on 5 years basis, it's a 15.7% return that the funds has performed. Axis Blue Chip, 15.5% return, goes higher at 3 years, and for 5 years the return is almost similar that you've seen in at least a year now. Reliance Large Cap, 13.59% return out there. 3-year basis, it's an encouraging number again, 18, and 5-year also the fund has pretty much kept the performance of 18% for that matter. Back to you.
Nikki, thanks so much for that. So some schemes have done well over the 1 year and have done well over 3 years and 5 years as well. It's remarkable that there are some very select schemes which managed to do this necessarily. Interestingly, I was listening to a Jack Bogle podcast, and Jack Bogle said that if a fund has done extremely well for 20 years, then it's time to sell the fund because the next 20 years will not be the same. You never know. I mean, let's not get into that debate. Let's try and figure out what is it that our experts believe are good funds to invest in at the current point of time. So here's the query that most of you had, right? What do you do if you want to invest in a large cap, mid cap, multi-cap, small cap fund at the current point of time? And I'm guessing the time horizons that our guests have are long term. So let's try and run through the recommendations of both of our experts. Gajendra, I'll start off with you, large cap funds, that category, and then I'll go to Tarun for his large cap funds recommendations. There are 3 names. I request you to explain any one of the names, paucity of time. Axis Blue Chip Fund, and the names will come up on your screen, of course. Gajendra Kothari recommendations on large cap category, Axis Blue Chip, Aditya Birla Sun Life Frontline Equity Fund, Reliance Large Cap Fund. Why these? Any one of them? Why would you choose this?
ABSL Frontline Equity, my own money is there. That's why, and it has not disappointed me. For last 7 years, I've been invested there, and I've earned around 50, what you showed there, 15 to 17% CAGR, which is quite good. And the fund manager had a very long track record. Mahesh Patil, very well-known fund manager, has been doing his job pretty well. I would say it's a consistent, low risk, low risk, high reward return kind of fund.
Okay.
Yes, comparatively.
Okay. Tarun, again, somebody wants to invest in large cap. 3 names, completely different. Why would you choose these? Any one of them, that is Mira India Equity, ICICI Next 50, and Franklin India Blue Chip.
Yeah. So I want to talk more about ICICI Next 50 fund, and this is a passive fund which is basically believes in indexing. So I feel in a large cap space, I strongly believe that indexing is something as an investor need to start getting into that. And so this fund basically mimics the junior Bs. So they invest in that fund only, and it's a completely passive style of investing. Indexing, the big benefit I see is the rebalancing keeps happening automatically. So a name like Reliance Communication, it used to be part of the top 50, top 100 stock. In indexing, automatically you'll start seeing these kind of imbalances will start getting out.
Sure.
But in a regular fund management, a behavior bias of fund manager can also start coming in, wherein because his purchase cost is something high, so he may not sell the stock. So like that, to get out of the behavior bias of fund manager also, I think this indexing as a concept attracts me.
And you're choosing the large cap category, which is the closest to difficulty of outperformance as well.
It has a 10-year track record. So I feel Junior Bs has a 10-year track record, which it basically invests in.
Okay. Let's talk about the next category. Tarun, I'll start off with you this time, multi-cap funds. Both of you have a common name, by the way, so you can choose to speak about that, which is Parag Parikh Long-Term Equity Fund. But that and Axis Multicap and Franklin India Equity Fund. Which one would you like to talk about?
So I think as a fund, I would like to talk about Parag Parikh Fund, and I have recently tried understanding their philosophy. And one unique thing I liked about them was they only have a single fund. They don't have many funds. So that shows a lot of conviction in their philosophy. Second part is they have a 30% investing option in foreign securities, which again gives a lot of leeway. And when we probed further to them, why global, India is such an attractive market, why you want? So again, they feel that as an investor, why should we restrict to limited sectors? So like a company like Google, Apple, so Alphabet, by the way, is one of their largest holding in their portfolio, which shows a lot of conviction, and they want to give investor a very wholesome experience. Apart from that, a lot of skin in the game is there. Almost 10% of the AUM is by the promoters and the employees themselves. That shows a lot of conviction. So I feel one can look at that.
And Gajendra has that in his recommendation list too. But since Tarun has already spoken about it, Gajendra, the other ones that you have, Mire Asset India Equity Fund or UTI Equity Fund, either one of these two.
So I have actually investments in all the three, and all the three have done very well.
Okay.
Parag Parikh, yes. skin in the game that's really make them stand apart from others. But apart from that, Mirai also I would say, because the fund manager has been there right from since inception, 10 years they've completed. A very consistent performance, which is not to be seen in many mutual funds. Most mutual funds have 3-year, 5-year good track record, but 10 years on dot, I think it's a tough job. So I would give full credit to Nilesh Surana, who is the fund manager. It's a great fund, somebody who wants a multi-cap kind of exposure. Right now it's heavyweight towards large cap, but they keep shifting, and he's a hands-on stock picker, so I have full confidence on the team. Yeah.
It's interesting. They're going to come and talk to us on the mutual fund show next week on the multi-cap funds as well, so that should be interesting. But thanks for that recommendation too. Now, Gajendra, the mid-cap funds, and very interestingly in the mid-cap category, you are definitely not going for the big houses, right? Edelweiss Midcap, Franklin India Prima, DSP Midcap Fund.
Correct.
Why? And any one of these, would you want to explain?
Again, DSP Midcap Fund I would take. Vineet Sambre has had a proven track record here. He's been consistently a small cap guy. His other fund, DSP Microcap, now small cap, has been one of the best performers anyways. So we have met him many times, and the kind of conviction we get is he's very, stay to the ground, keep meeting the companies and seeing the numbers. So, the kind of risk they take vis-a-vis the performance they've given, it's a great bet to go for this kind of fund.
Okay, interesting. Tarun, very quickly, the names that you have: L&T Midcap Fund, HDFC Midcap Opportunities Fund, and the Axis Midcap Fund.
Yeah.
Which one would you want to?
I would like to get into L&T Midcap, and the reason for that is Midcap as a game is a stock picking game. So the fund manager skill really comes into play in the mid-cap space. And Somendra Leri, who manages this fund, I've seen last 10 years, he has a very deep understanding of how these mid-cap companies behave. The kind of companies he have taken, I think the corporate governance and all those levels are much higher compared to other funds. So I would strongly look at this fund, yeah.
Okay, interesting. And
also, all these funds which I have picked has low sizes, and in mid-cap funds, size do matter.
Does matter, sure.
Yeah.
Okay, so that's the other bit. I want to ask about debt funds and the rationale thereof. I think safety first would have been the reason after the recent bout of news flow that has happened. But I'll just read out the names. Gajendra Kothari recommends in the debt fund category the Kotak Corporate Bond Fund, the IDFC Banking and PSU Debt Fund, and the DSP Ultra Short Term Fund. And Tarun recommends IDFC Banking and PSU Funds and the Axis Banking and PSU Funds. So those are the two recommendations that are coming in from Tarun Bidani. The last category, because we are out of time completely, and I'll make an exception. I told one of our guests to look up the tax saving funds on the show, but maybe just because it's just the fag end of the tax season, maybe this answer is worthwhile as well. Tarun, let me come to you for the ELSS categories. The three names that you're recommending: Axis Long-Term Equity Fund, Franklin India Tax Shield, Mirai Asset Tax Saver Fund. Any one of these funds? So
Axis Long-Term Fund is one fund which I have been looking at from last 5 years, and they have been quarter on quarter, 6 monthly, yearly basis. I have found them outperforming all the other funds in the category. And I think their research process, I met the fund manager himself, and I found them extremely well read, as well as their understanding of each stock is in depth. So I would like to give it to them.
Okay. Yeah. Gajendra, you are going with the Mirai Asset Tax Saver, Invesco India Tax Plan, and the DSP Tax Saver Fund.
Yeah, all three are comparatively good, but DSP, I would go with DSP Tax Saver Fund because it has a much longer track record, and surprisingly, they've been very consistent performers in this category compared to all other funds. Even ICICI and Birla had vintage funds in this category, but they have all seen bouts of their cycles. But this fund has consistently been there for last 8-9 years, and our investors have made a lot of money, and I've made a lot of money in this fund as an investor. So I would continue to hold and continue to invest further in these funds.
Very interesting. Gentlemen, I would have loved to talk more, but out of time on the show completely. But take a moment to thank both of you for joining in today. And Tarun, once again, have a great birthday.
Thank you.
One thing that we would request, and viewers, some of the queries we haven't been able to take, but we'll try and send the queries to both our experts, and maybe responses to those queries could come in during the course of the week. So keep that at the back of your mind. And every month, once a month, we'll talk to you directly on the queries that you have. So keep on tuning into the Mutual Fund Show and asking your queries. Thank you so much, both of you, for joining in. And viewers, thanks for tuning in to this leg of the Mutual Fund Show. Stay tuned to Bloomberg Quint.